Hey Mom family, this is Ryan with the Passive Portfolio. I'm going to show you a quick and easy way to do a stock study guide. And the company that I decided to pick was Walt Disney. Ticker symbol is DIS. So if you highlight over their name, you're in the SSG plus layout, but if you highlight over their name, you can see that it gives you an industry, sector, company size, and a quick description of the company and what they do and kind of things that they own. But basically, we're going to be looking at their trend. So when you first get into a stock study guide, you want to see that their trend is positive, so it's going up in a steady manner. And then you also want to see all these other different trends like the pre-tax profit, the earnings per share. You want them to be kind of rolling up in a ladder almost, very parallel to each other. And when you kind of start to see them trending off or doing some funky stuff, that might throw some red flags, and you might need to look into doing some further investigation of the company. So we're going to go to research, and we're going to hit better investing, member sentiment, and this is basically every single stock study guide that has been done in the last 90 days on better investing. So if you scroll all the way down and you hit select and you scroll all the way down, you'll select all of these SSGs that have been completed by other club members, and you can see that it gives you an average. So you have average of sales, earnings per shares, high PE, high EPS, high price, low PE, low EPS, low price. All these things are already kind of figured out for you, and this is a quick and easy way of just not using your opinion, just using the opinion of other people, but gathering some information, kind of like a base average of what everybody thinks. And so what we're going to do is I'm going to take a little screenshot of this and set it off to the side. We're going to go back to the original page, the analyzing growth and quality page, and we're going to come down to the fundamental company data. You're going to look at historical sales. Obviously, you want them trending up. I mean, if it's starting to trend down, that could be a red flag. But you can see that in 2019, they were able to pull in $69.5 billion in sales. And even though it says 69,570, you got to understand that it's in millions. So just add a million marker to that, which would equate to 69.5 billion. Their average growth rate over the last 10 years was about 6.3%, which is good. Typically, for large cap companies, you're looking at anywhere between 5 to 7% is kind of where you want your growth rate to be. For small caps, you want 12% or higher, and medium caps, you want to be anywhere from between 7 and 12%. So first, we're going to click our historical sales, and it's asking for our 5-year forecast sales growth rate. So we're going to go back to our better in sentiment, where we either wrote down the numbers, the averages, or we've screenshotted it. And we're going to go to sales all the way down, and we're going to use the average, which is 8.6. And we're going to input that into our stock study guide and update it. And see, you can see it generates our 5-year estimate of growth. Now we're going to go to historicals earnings per share, and you want that to be also climbing pretty steadily. Earnings per share is basically a way to show how profitable the company is. It kind of gives you a cost dollar average. So we're climbing up, climbing up, climbing up. We kind of hit a peak in 2018, and then we take a dive in 2019. That could kind of raise some red flags, but also you got to think about Disney did just roll out with their Disney Plus, and they've purchased ESPN, and they have all these different acquisitions that have occurred. So that could be affecting a lot of these numbers. But overall, it's not a horrible number. 15% earnings per share is not bad. And then we're going to enter in. We're going to click on this little green circle. We're going to enter in our earnings per share growth rate forecast over the next 5 years. And don't worry about any of this other stuff for now. This is more when you get into your own opinion. We're just going to do a very basic breakdown. So we'll go back to our screenshot, and we'll look for earnings per share, which is right here. and we're going to get 8.7. So 8.7, and we're going to update the study. Okay, and now this first page is completed. Typically with the evaluate management, I kind of just glance over these. You want your pre-tax profit to steadily be increasing. You don't want it to be decreasing. Obviously in 2019, it's decreasing, but like I said, there's some different, 2018 and 2019, but you got to look at the company and see what's kind of been going on with their management team. Return on equity, you want to be looking for a return on equity of about 15% to 20%. Some of the best companies out there have about a 20% return on equity, which is pretty good. And then you want to look at debt to capital. You want it obviously to be going down. You don't want them to be holding a bunch of debt because that affects your profit. But typically you would want to be looking for anywhere between 33% or lower for debt, which they're right on the cusp, but it's pretty good. Like I said, they just made a bunch of different acquisitions. So the first page is done. Now we're going to go to evaluation and return. I wouldn't worry about this number 3 tab. That's more for your opinion based stock study guide. Like I said, this is just a very basic breakdown, quick and easy. Now we're going to come into number 4, high price over the next 5 years. So this is kind of predicting the high price based off of your profit earnings ratio. So if we go to our better sentiment screenshot, we can go to our high PE, which comes down, we got 20.43. We can use that number to kind of predict the outcome of our high price, which it's coming out to be $183.20 roughly. Okay, so we got our high price now, and this is just a forecast. And now we're going to come down to low price over the next 5 years, and you don't really need to know any of this stuff because it's kind of just a breakdown of it, but we're going to go down to the green box. Like I said, skip. This is all just what we just talked about. Let's just skip all this. This is more for opinion based. So you're going to select your low stock price forecast, and we're going to come down to 96.87. 96.87, that's our low price. That's estimated from everybody in the club. Oh, they only like 1 decimal point, so delete that. So as you can see, everything is generated now, and we're looking at our evaluating risk at a glance. So it's currently telling us that we're in the hold zone, so this is not something that we really want to be buying at the moment. The forecasted high price is about $183.30. The forecasted low price is $96.80, and just as of yesterday, the closing price was $140.37. So you're looking at an upside down ratio of about 1-to-1, which we're typically, when we look for companies, we want to be looking at a 3-to-1 or higher. The potential price appreciation is at 30%, which is, it's okay, not bad. So now we're going to come down to subcategory C, zoning, and you have this option right here. If you toggle it, like click on it, you can switch it back and forth between 33, 33, 33 or 25, 50, 25. And that's basically just showing you the tolerant, like the conservative or risky investing. So we'll click on this show hide gain versus loss chart, and this will kind of break down where we're at with our buy, hold, or sell. Currently, it's telling us that we're in dead center of hold. So this is a company that we should be watching, but not necessarily be looking at buying anytime soon. And you can toggle this. So we'll go back to the conservative 25, 50, 25, and you see the graph has changed a little bit. The hold is a lot bigger, but we're still just dead center of the gain versus loss chart. So company we should be holding on. We shouldn't be buying at the moment. This is a 5-year potential breakdown. At this point, if you're just doing a very basic stock study guide, you don't really need to know a lot about this. So we've basically finished our stock study guide at this point. We're gonna go up to print, and you can choose whether or not to select all the notes that are applied to this SSG, and you can either check off quarterly growth trend data. So it's going to include all the quarterly growth trend data over the last 9 years, I believe. and we're going to generate the PDF. Earnings per share trending off, which is a little bit concerning, but it's all right. We could do some further research into it. And then the estimated future sales growth that you input, which is 8.6, the historical sales growth, which is 6.3 that they've actually had over the last 9 years. Then you got the historical earnings per share growth, which has been 15%, and then you got your estimated future earnings per share growth in there at 8.7%. This is the evaluating the management, and then the breaking down the price earnings history, and which we really didn't look at. But then you come down to our evaluating the risk and reward over the next 5 years. Our inputted price was, our high price was $183, and then your low price was $96. You can see right here. Our zoning was set to 25, 50, 25, which is pretty conservative, and it put us in a hold zone. So currently, like I said, we're not looking to buy the stock, but good company to be aware of and keep an eye on. And then our upside down ratio is 1-to-1, and then like I said as well, it should be about 3-to-1. Then you can scroll down further and you can get down here and you see all the notes that either you put in or the community put in. This is basically just some key notes that people thought were important or you thought were important. And then going down further, you got your quarterly data, your last 12 months data, so TTM, and it kind of breaks down everything all the way back to December of 2009. So that's basically how you complete an SSG, super quick and easy, and you can do this with any stock, just using better sentiment. Hope you enjoyed the video. Like and subscribe, and let me know if you have any questions in the comments below. Thanks.